Welcome back. This is SeeWing Yi from the Yi Real Estate Network. So today I'm going to do a comparison. Okay, I'm going to compare our one single family home co-living new construction investment model here in Jacksonville, Florida. All right, so let me share my screen and here we go. So this is our 7 bedroom, 7 private bath, 1-to-1 bedroom ratio for co-living workforce housing here in Jacksonville, Florida. This is a new construction, ground up built for the co-living model, workforce housing. 320K, typical traditional single family home, 1,900 square foot. You put 20% down payment, which is you could use a unique loan, DSCR, debt service credit ratio, no doc loan. As long as you have 20%, you have good credit score, the lender will qualify the property itself, and this property qualify for this for this loan, DSCR loan, and at a very competitive rate, a little bit higher than the conventional investment loan rate, full doc loan. Anyway, so having said that, this property rents for at least $1,000 per month per room, so equals $7,000 gross rent, which is at least 2%, rent to value ratio, which is very desirable. Again, minus all the costs and everything else, your net monthly cash flow is $1,859. Would give you a cap rate of 13.2%. Annual ROI is 27%. Now, I want to compare to this co-living investment model, the fastest growing real estate asset class, the co-living investment model using past split as a marketing platform. So I'm going to compare this monthly net cash flow on this property with the traditional rental properties that people typically buys all over the country. All right, so it's just an apple to apple comparison. At the end of the day, you will see, at the end of the day, you will see you need to buy smart, okay? You need to buy efficiently. It's all about uh, having the most amount of cash flow with the least amount of properties. So you can simplify your life so you do not need a second job. This is turnkey type, almost passive investing. And this is absolutely incredible. All right. So let me compare to the other models, the traditional models, and go from there. All right. So here we go. Okay, you can pause the screen on your own to go over the pro forma of this particular co-living single family home, 7 bedroom, 7 private bathroom per tenant. All right, so go ahead. I'm gonna skip the 10-year average. You can also take a look at it. I'm not even gonna go over the duplex model. We have 14-14 ratio, which is absolutely incredible. I'm just gonna compare the single family home. All right. So with that in mind, so I just happen to plug uh, the other similar properties, compare how many properties you need on a traditional long-term rental property based on the monthly net cash flow to equal to the monthly cash flow around $1,800, $1,900 on the co-living single-family home model. All right. So I need to buy, I'll give you some heads up. I'm going to show you 7 of these properties. One has to buy. You need to buy 7 of these cash flow properties at 20 to 25% down payment based on the monthly cash flow. In this case, to compare to the one co-living property cash flow. Okay, that's all I'm comparing. I mean, I'm not going to delve into other aspects of real estate market strategy, whatever. All right. The first property, a typical Midwest property, $70,000. You put whatever 20% down payment, you get cash flow 215, which is fine, right? A lot of people in the Midwest buy these kind of properties. Those local investors, they buy all over the Midwest for years and years and years. That's fine. 50-year-old, 100-year-old homes, whatever. Okay. They feel comfortable. That's fine. Right. So that's the first property. Another typical property somewhere else in the Midwest, you buy for $71,000. You put $20,000 down payment. You have cash flow of $172, right? Good rent, return. So nothing wrong with buying this kind of traditional long-term rental in the Midwest market. As long as you cash flow, you invest for long term, you're gonna do fine, right? At least these individuals, these motivated investors are taking action. Like, unlike most people who continue to sit on the sidelines and do nothing, right? You buy real estate and wait instead of wait to buy real estate. So I'm not saying, but you take action better than not taking action. Buying this type of properties at different areas of the U.S., that's fine, right? As long as you have a long-term buy and hold, you will come out ahead financially as opposed to someone that continue to sit on the sideline, right? That's the second property. And this third property, but the first two property in the Midwest, like I said, they are anywhere from 50 to 100 years old. For give it for whatever it is, higher cash flow, very old properties, assuming they'll renovate it. As long as you cash flow, that's fine. As long as you think it's a good rental market, continue to buy in this various Midwest and Northeast market where they have very old housing stock. You have to incorporate, capital expenditure, maintenance, upkeep, vacancies in the whole 9 yards, right? That's so, and then of course you can buy some small cookie cutter new construction property in Oklahoma. Nothing wrong with that. 150K cookie cutter home. It's going to do well. You put 20 to 25% down payment. You have $300 monthly net cash flow. Hey, when you buy long-term rental, right? Typical long-term rental, expect the first year cash flow to be relatively low, anywhere from a couple of $100 or slightly more. That's how it is, right? That's how you play the game. But of course, you're not just buying for cash flow only. You're buying for appreciation potential, tax benefits, the tenants pay down, and you buying for leverage. There are all kinds of reasons you buy, not just for cash flow. I get it, but I'm just using cash flow comparison for the purpose of this presentation. Compare my one co-living single-family home getting almost $2,000 monthly net cash flow on 20% down payment versus you need to buy seven of a traditional long-term, property to equal the cash flow. One word versus seven. That's what I'm comparing. Okay. All right. And another property is in Alabama, 259K. You put 20% down payment plus closing costs, 40 to $45,000. Your cash flow in this case, $415 monthly net. And of course, you buy some better housing market in North Texas, which I'm promoting also, right? Very fast growing, brand new property for 206,000 in Sherman, Texas. You put 30% down payment and you cash flow $452. Not bad, right? And another one in one of the fastest growing areas in the country, in Princeton, Texas, also in North Texas. Again, very brand new, very desirable property, 203,000. You put 30% down payment, you cash flow for 373. Okay, nothing wrong with that. Okay, another one, right? 206K in North Texas, 30% down, 452K cash flow. So at the end of the day, those are the seven properties that you need to buy in order to equal to $2,000 monthly net cash flow, right? Compared to my co-living property, single family home at $320,000 in Jacksonville, Florida, co-living property. Of course, you have the other investors, they can do burst strategy. You buy, you renovate, you refinance, and you repeat. A lot of people use a traditional burst strategy. The return is not as great as before during the pandemic. A lot of people do the fix and upper. They buy old property. They pay the fix up cost. A lot of people do flipping. A lot of people self-manage. I won't. I'm not going to create a second job self-managing. You know what I mean, right? A lot of properties in Midwest. Yes, they are cheap. Yes, they have good cash flow, easy to get in, but they are very. they look like this, right? I don't know. Okay, they may be cheap, but or you could be stressed out with the self-managing or dealing with this tenants and toilets, at the lower quality neighborhood throughout the Midwest. I don't know. Okay, look at the potential maintenance and upkeep, but I'm not here to talk about that. I'm just going to I just did it. I just did an apple to apple comparison Look, I'm not gonna, you just have to understand that a lot of people are not aware that the co-living investment model is available out there. It's just, it's very fast growing. Past Split is doing the marketing and for our model, but that's it. That's it. At the end of the day, I'm just trying to give you an apple to apple comparison between one co-living property you buy, single family home, traditional financing 20% down equals almost $2,000 monthly net cash flow. You rent by the room, business model, new construction in Jacksonville, Florida. And comparatively speaking, you have to buy almost seven rental properties on a traditional long-term basis just to equal to cash flow. So at the end of the day, to recap, is you have to be efficient. You have to work smart. Okay, so you own the most cash flow with the least amount of properties, right? And get some tax benefit along the way. Invest for the long term. So therefore, co-living investment model is very lucrative, is very attractive for the reasons I partially explained that to you in today's presentation. There's more to it than that, but just I want you to make you aware that if you look deeper into investment opportunities, if you stumble into a co-living investment model like you stumble into my presentation, hey, you're very, very fortunate and you're very lucky that this new asset class could be part of your real estate portfolio building. So at the end of the day, that's what I'm trying to accomplish. Do an apple to apple comparison. You buy one co-living, or you need to equivalent seven long-term rental just to equal the monthly net cash flow based on 20 to 25% down payment. Okay, all right. So in the end, so if you see a value in this presentation, please like and subscribe to my YouTube channel. And better yet, you put your email into my website below so you can become your so you can become a, a free subscriber to our organization, a free member of our network of like-minded investors. You can receive weekly email on housing markets, real estate investment opportunities, co-living model investment opportunities, and other strategies that we have for our investors. All right. Thank you so much for watching. This is SeeWing Yi from the Yi Real Estate Network. Have a nice day. I'll see you next time. Bye-bye.